What we discuss here are the three types of accounts and the rules of debit and credit. The first one is personal accounts. The accounts relating to persons and organizations are known as personal accounts. For example, Ram's account or Mohan's account. All accounts relating to debtors and creditors are personal accounts. It also includes the capital account and drawing account of a proprietor or partner. The rule of debit and credit attached to personal account is debit the receiver and credit the giver. For example, if Ram pays cash rupees 1000 to Mohan. In this case, Mohan is the receiver and Ram is the giver. Therefore, in Mohan's personal account, an amount of rupees 1000 will be debited as Mohan is the receiver. In Ram's personal account, rupees 1000 will be credited as Ram is the giver. Debit side of a personal account shows how much money is received and the credit side shows what was paid. The second one is called the real account. All accounts relating to assets, be it tangible or intangible, are called real accounts. Land and building account, machinery account, cash account, bank account, goodwill account are examples of real account. The rule of debit and credit attached to real account is debit what comes in and credit what goes out. For example, if a firm purchases a machine for cash 40,000, we understand that machine is coming in and cash is going out. Therefore, in the machinery account, rupees 40,000 will be debited as machine is coming in. In the cash account, rupees 40,000 will be credited as cash goes out. Basically, the debit side of a real account shows what has come in and the credit side shows what has gone out. The third type of account is the nominal account. Accounts relating to expenses, losses, incomes and gains are known as nominal account. Examples of nominal account are wages account, rent account, salary account, interest account, etc. The rules of debit and credit attached to nominal account is debit expenses and losses and credit incomes and gains. For example, if a firm pays rent of rupees 3,500, then it is an expense. So the rent account will be debited by rupees 3,500. But if the firm receives rent of rupees 4,000, then it's an income. Therefore, in this case, rent account will be credited by rupees 4,000. We can say that the debit side of a nominal account will show all expenses and losses, whereas the credit side will show the incomes and gains. Keeping the three types of accounts in mind, we must remember the rules of debit and credit. Personal account, debit the receiver and credit the giver. Real account, debit what comes in and credit what goes out. Nominal account, debit expenses and losses and credit incomes and gains. These are the golden rules of accountancy.